spot in the market, an otherwise weak market. Today it's up about 0.3% as we speak. Oil and gas also holding on to some sort of a gain, but on the losing end, IT index is the top sectoral loser in today's trading session. 1% downtick coming in for the IT index. After that, if you look at the other sectoral indices, what are they doing? You have metal that is down about 0.5%, and you have the broader markets as well that are seeing weak trade today. But before we move on to BNSN Pathshala with Kunal Bothra, let's talk about Gujarat Gas in particular. That particular counter is in focus in today's trading session. As you can see on your screen, the stock is down about 1.3%. My colleague Somit is here to tell us exactly what is happening in Gujarat Gas and what sort of a reaction and why we are seeing this sort of a reaction on that counter. Somit, over to you.
Well, basically in case of Gujarat Gas, if you see the competitive intensity in its key area, that is the Morbi region, has been continuously increasing. Now, recently, the company a couple of days back had taken a price cut of around 13%, the biggest price cut ever of around 7 rupees per SCM. Now, this price cut was taken by Gujarat Gas to make gas prices more competitive in the Morbi region and to boost the volumes of gas volumes in that region specifically. Now, in response of this price cut that Gujarat Gas had taken a couple of days back, propane dealers have also taken a price cut of around 1.2 rupees per kg. Now, because of this price cut, again propane has become cheaper when compared to the gas supplied by Gujarat Gas. Now, Confidence Petroleum, who is one of the smaller propane suppliers in that region, has taken a price cut of around 1.2 rupees per kg, and dealers are also suggesting that other large suppliers are also contemplating to take similar amount of price cut. Now, because of this price cut, if you see, Gujarat Gas's gas in the Morbi region is supplied at around 46.4 rupees prices, while the propane price or the equivalent propane price stands at around 45.5 rupees. So around 1 rupees cheaper compared to what Gujarat Gas has been providing gas in that region. So the competitive intensity in that region is increasing. Now, earlier, because of the price cut of 7 rupees, the dealers were suggesting that more players will shift towards gas from propane again, but as propane has also been propane suppliers have also taken a price cut. Now the chances of users shifting to gas remains less in that region.
Okay, thank you so much, Somit, for highlighting all those details, what's happening with Gujarat Gas and why the stock is under pressure today. Well, let's move on and on to the Buy Now, Sell Now Pathshala today. It's a Learning Friday for you all, and let's get across to Kunal Bothra to know from him what interesting topic he has got for our viewers today. Over to you, Kunal.
Thank you so much, Srishti, for that. Good morning to everyone. Now, today's topic is not the traditional, trend reversal topic, but I have looked at the traditional trend reversal topic and mapped up an indicator which I'm sure most of you have never heard of. That indicator. It's not a typical bullish hammer pattern which I'm talking of, but it's a very rare kind of a chart pattern which you typically spot on the charts, and especially it helps us in spotting reversals. So the pattern which you are looking out for, which you'll see in the next slide, is not just a traditional, as I said, hammer pattern. This is how a hammer pattern looks like in terms of candlestick. This is the body of the candle. This is the lower shadow, which we call, and this is the upper shadow. This this higher lower shadow tells you that the stock had, or the asset class has recovered from the day's low and managed to close at the higher point of the day. The lower the upper shadow, or the less the upper shadow, indicates that the stock has closed at the higher point of the trading sessions, and the lower the body is the stronger the hammer which you look out for. Now, the pattern which we are discussing, as we can see the importance of hammer in the next slide, would be that hammer patterns are generally occurring at a point where it indicates strong reversal. So this is for example a negative or a downtrend which had come to the stock price after a bullish hammer pattern which got spotted over here. The stock got into a reversal phase. So this is a classical sign of a bullish hammer pattern. But then on the charts, a rare kind of a pattern which we look out for is a double hammer pattern. So we look at this in the next slide. So when you spot a double hammer pattern, this is a double confirmation that the stock has formed a very strong support or a demand zone. And when you see reversals from these kind of stocks, the reversals can actually take the stock back towards the previous highs and sometimes even cross significantly above the previous highs. One of the examples which I have covered is Havells, for example. This is the very recent charts for Havells. This was the major downtrend the stock. So as you can see that there have been multiple signs where there has been single hammer patterns over here. The stock went into a recovery phase. Then there was a minor single hammer pattern which was seen over here. The stock went into a recovery phase. But this is the zone where the stock saw a double hammer pattern. And look at the recovery from here. The stock not just crossed this previous high, but it also came very close to breaking past about the previous major high for itself. And this was almost a 30% rally the stock had seen in a span of 1 to 2 months. So this is the special chart formation which I wanted to indicate on trend reversals.
All right, that's a special chart and the special technical analysis coming in from Kunal. And Kunal, I'm very intrigued to ask, did Thor also inspire you to take this one? Because given it is Friday, that's the only thing that was actually coming across my mind. When I've seen the hammer pattern, I was thinking only about Thor. So do you have plans to catch that on OTT this evening?
Well, absolutely, yes. And actually, I think imagine having two, hammer at the same chart. I think that's the significance of this pattern.
Absolutely. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But when we come back, no, we will not discuss movies, but we will be discussing your queries. So stay tuned.
Powered by
company, we have access to capital, we have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back. You're watching Buy Now Sell Now on ET Now, and this is a show where we get you answers on all of your stock related queries. You can connect to us. We are live on YouTube, Twitter, as well as on Facebook. You can ask us your queries also on WhatsApp number that will be flashing on the top of your screen very shortly. Do mention your name, the time horizon that you're looking to hold a stock. Do mention the stock name as well. And if you're already holding, then mention the buy price so that our experts are able to help you much better. But before we get on with your queries, let me bring on board our guests for today. And we have Kunal Bothra, who's joining us on the technicals, and Avinash Gorakshakar on the fundamental side. A very good morning once again to you, Kunal, as well as Avinash. Thank you so much for joining us on the show. And Avinash, before we get started with the queries, I want to know what's your take for the year 2023? What should retail investors do, and what sort of a strategy they should apply in order to keep their wealth protected?
Yeah, good morning, Sharon. My sense is that 2023 is going to be a very volatile year, and I think looking at the kind of headwinds coming in from global markets like US and Europe, we could find that the first half of 2023 could be extremely volatile and could obviously generate extremely moderate to negative returns. It's only in the second half of 2023 that we could see a decent bounce in the markets, and I think with 5 state elections in India plus this being a pre-election year, I think you're going to see a lot of volatility. So I think investors should stick to the large caps, preferably, and I think they should follow the SIP approach, which I've been, telling your channel earlier also, that I think to buckle the volatility, I think it's always better to take a long-term view and stick to your SIP targets. Only that would obviously lead to wealth creation in the medium to long term. So I think there's no need to worry or panic, but I think you could see a lot of action in the broader market, and the index could possibly remain in a very volatile range. So better to stick to good quality companies and obviously use the dips to accumulate these good quality businesses at good prices.
Okay, so that's the advice coming in for all our retail investors. But let's move on and kickstart taking all your stock-related queries. And the first question that we have is coming from Nageshwar. And he says, Master Kunal is saying that he's bullish on gold, but on the flip side, he expects crude to see some lower levels. So keeping this in view, will he be bullish on some of the plays from the OMCs, paint, or some of the tire companies? If yes, then any pick amongst these?
Well, it's going to be a bit tricky to find exact correlations, because I think in 2022, none of the correlations have actually worked. When inflation spiked, crude, crude rallied up higher. Gold did not rally up higher. In fact, gold, also went into a corrective phase. But this time around, it could be a bit different, I would sense. So to answer your queries, I would believe that possibly, the OMC stocks may get into a very shallow kind of a rally. I call it very shallow because it would be very, very meager in terms of the price action these stocks have seen over the last many years. So possibly another 10 to 15% higher is what I would expect as a moderate target, say over the next 3 to 6 months broadly for these OMC stocks. But then one space which I would be more bullish on, looking at the gold theme, would probably be the gold finance names, and I think particularly over there Manappuram looks to be something which is attractive. The stock had tried to break the major supports of 100, 105 2 or 3 times, but the stock has recovered very swiftly from those levels and has not given a breakdown below the 100 mark, at least over the last couple of weeks. So that could probably indicate that the stock trends have reversed. Paints is something I would not advise at current levels because of the way the stocks have corrected. Both in fact the likes of Grasim, Asian Paints as well as Berger Paints.
All right, let me take the next query coming in from Santi. Latent View holding about 39 shares at a price of around 396 rupees per share. What Santi is saying, he stopped accumulation in the last 2 months because of the queues on the IT sector were weak. But this stock is well sustained with positive bias. So he wants to know from both the experts to basically understand the strength of the company as well as the stock action or price action going ahead. So Avinash, let me come first to you on this one. Latent View, do you think that it makes sense for Santi to stay put with this holding given the fact that yes, the IT sector, we're seeing some bleak outlook there?
See, first of all, Latent View is not a pure IT company. It's a data analytical company and has a very decent order book. The company is also debt-free, has a lot of cash on the books, and the management has also mentioned that they are on the lookout for some good inorganic, opportunities. So my sense is, I think, despite the fact that headwinds in the IT sector continue to be challenging, I would not be surprised if the company still shows a decent kind of growth, considering that they have a decent order book. I think growth numbers could possibly get impacted if there is a stronger point of recession from the US and Europe. But I think at the current levels, I would suggest the investor should hold on, keep a time frame of at least 12 to 18 months, because the company has inherently very strong, business model. It's got a decent balance sheet, good cash on the books. So I think these factors should obviously help the company to face any negative eventuality. So definitely hold on for a longer time frame, and I think you should be able to get a decent risk reward if you can hold on for the next 12 to 18 months.
Right. And Kunal, what's your view on Latent View? How is the charts looking for this one?
Yeah, it looks attractive. In fact, the very recent charts indicates 200 moving average breakout for Latent View. I think 370 approximately is the breakout of the stock, and it's trading mildly above those key moving average resistance. So I think that's an indication that possibly the trends are starting to reverse for Latent View over the on the positive side. So I think it's a good stock to hold on to even at current levels.
Okay, good stock to hold on to at current levels. Moving on, the next question we have is from Akash, and Avinash is holding some shares at a price of 418, near about the current market price, but going ahead for short to medium term, is that advisable to stay put in this counter?
Yeah, I think over the longer term, I think you could definitely expect a decent upside. My sense is that, if the investor has a slightly medium to long term horizon, then I think he can expect a decent upside here. I think in the very near term, the outlook definitely is a little bit hazy. But obviously, in considering the kind of demand outlook, I would not be surprised that he should get a decent risk reward. The only point is in these kind of markets, you need to stay put in some stocks, and I think keep a time frame which is slightly medium term. So I think he can hold on and obviously expect better returns in the coming, at least 12 to 15 months.
Right. The next one is coming from Madhuri. Kunal, this one is for you. Entry levels for BEL and BHEL for the medium term, that is 1 year, is what Madhuri is asking. Also, do you see any scope for further correction in either of these counters?
So I think the majority of the correction seems to be over. At least, in fact, BEL has now come back below the 50-day moving average. So I think, as I mentioned, I think a few weeks back, that if the stock comes closer to its 200-day moving average, that's a classical point where you can look to buy or average depending on what your initial holding is. So I believe that the same stance I would apply for BEL even at current levels. The 200-day moving average is approximately at 92.5 levels for BEL. So assumingly the stock comes closer to 92.5 or 94 levels, that's a good entry point for BEL. BHEL, I've been an advocate of a buy for the stock over the last many months. I would still maintain that stance. The 50-day moving average is a good support for BHEL, which I think is around this 78 or 79 mark for BHEL. So anything closer to 80 levels, approximately or slightly lower than 80, is a good entry point for BHEL as well.
Okay, moving on, the next question is from Bharat and Kunal. He is holding shares of ABFRL from a price of 288. What to do with a short to medium term perspective?
So I see that ABFRL has underperformed. I think, in fact, I was looking at the charts for ABFRL, Trent, as well as the likes of Shopper Stops. These stocks have underperformed in the last 2-3 months. My sense is that it could be a routine correction or more of churn from the apparel sectors towards maybe some other sectors, and I think that's one of the reasons why these stocks have underperformed. At current levels of 280 approximately for ABFRL, it's come back just around the 200 moving average. It's slightly below the 200 DMA, but then I think it's just hanging around the 200 moving average. So which means you've bought at 288, you're sitting with marginal losses. I think you should continue to hold on.
All right. A lot of short-term queries actually, but let me take this one to you, Avinash. This one has come from Vasu, and he's asking whether it makes sense to go ahead and do bulk buying of Bajaj Finance at current price. Do you think it's an advisable move to look to invest in Bajaj Finance, given the fact that it has seen that sort of a correction, a sharp one, but do you think the fundamentals are intact?
See, my guess is Bajaj Finance delivered decent numbers, but I think they were below the street expectations. And I think, on a higher base, growth numbers in percentage terms are bound to come down. So I think the stock has been beaten down largely because the market was expecting higher growth. Now, as far as the investor's query is concerned, whether he can buy bulk buying, I would suggest, it's always better to buy in small lots or maybe in small tranches, because that will help him, average the price better. In case the Bajaj Finance comes down to level of 5,500 or typically 5,700, I think that would be a good opportunity to accumulate this stock, because growth numbers would definitely kick in. They are large players in the consumer finance, consumer durable market. They have a very strong asset quality, number, and most importantly, they are very well funded. So over the next, say, 2 years, if one wants to take a call, he should obviously look at buying this stock in a small tranche manner, not in a bulk manner, because that would obviously mean he could obviously benefit from averaging the market price, which currently looks weak. So at least bulk buying should be avoided. But yes, he can buy in an SIP mode and obviously take a view for 2 years.
Buy in an SIP mode, but keeping on with Bajaj Finance, a couple of viewers are also asking for the technical view. Rajesh Maheshwari and RLK Rao has bought shares at a price of 6,500. Kunal, what will be your view? Both are currently at loss, so what to do now?
See, I think after yesterday's price action and the knee-jerk reaction towards the price, I think it makes a lot of sense to look to exit the stock. Now I understand that these are top quality names which have a strong pedigree over the last 10-15 years or so. But then the recent chart patterns indicate that the selling pressure could intensify for the stock. And look at it this way, that Bajaj Finance and Finserv have been underperformers even the last 2-3 months. These stocks had already gone through a correction of 15%, and after yesterday's price correction, there could be room of another 5 to 7% correction at least into these names over the next maybe 3 to 4 weeks or maybe 1 to 2 months for these stocks. So possibly it makes sense to look to exit the stock on any kind of a mild bounce, which these stocks would probably show, and then look out to buy the stock back again. So maybe at 5,400, 500 for Bajaj Finance could be a better level to buy the stock back again.
Okay, Kunal, you spoke about Asian Paints, saying that this is not the right time. You believe that you should take position in Asian Paints. But Kaji De Cruz wanted a view also on Divi's Laboratories. And do you think it makes sense to start taking long-term positions in Divi's Laboratories now?
Yeah, I think it makes sense to start nibbling into the stock. I would not say take a sizable quantity, because the evidence on the charts is still not very strong for us to call a major reversal for DV slab. The best what has happened is that the stock has stopped falling, and on days when the prices have moved up higher, like what we saw, I think a couple of weeks back, the volumes have jumped up higher, which means that there is an inclination of buyers to try and hold up the stock price or the demand to overpower the supply. Now those are initially good signs, but then the confirmation would happen once the stock breaks past about the resistances in terms of price level. That could happen once 3,600 level gets taken out. So you can start nibbling at current levels, and as and how the stock grows on confidence and breaks past about 3,600, you can look to add further.
Okay, the next question we have, Avinash, is from Bala. He has bought IRCTC at a price of 962 and Glenmark Pharma 200 shares at a price of 638. For IRCTC having a loss of over 1 lakh, he wants to know how the fundamentals are looking for both of these companies, and does it make sense to average out at these levels, and what will be the correct price to actually average out?
Shrishti, as far as IRCTC is concerned, it's a regulated monopoly, and I think the major chunk of its business comes from the internet ticketing business. There has been a drop in the stock price, but if you look at the fundamentals, the company has been doing very well. In fact, post normalcy and post COVID, I think most of the trains which they operate are running as per schedule. My sense is that if the investor has a slightly medium term horizon, he should use this opportunity to actually average the share here, because regulated monopolies are definitely very profitable. And I think looking at the kind of announcements expected in this year's budget, railway infra is definitely going to be a buzzword, and probably one could get some further announcements which could give it a little positivity to the IRCTC counter. Overall, the company is also planning to get into the bus ticketing business, the hotel business. So there are lots of opportunities, and the company is cash rich, has a very high ROE, return on capital, operating kind of metric ratio. So all these factors point out that you need to give a little more time to the counter. Fundamentals are strong, but the sentiment is weak. So I think he could definitely look at averaging at the current level.
So that's the view coming in on IRCTC and Glenmark Pharma. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back and we'll be taking more of your stock-related queries.
नए भारत का
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back to Buy Now, Sell Now, and let's keep it going with your stock-related queries. And the next question is from Veni. And Avinash, can you help her because she's holding Zomato at a price of 110, and the other one he has is Chola Investment and Finance from a price of 740. Currently at a loss in both of these counters. How are the fundamental looking, and is it advisable to hold on or book losses at these levels?
Shrishti, as far as Chola Investment Finance is concerned, I would believe it's a leading, NBFC name in South. I would not be surprised that the coming year could be definitely better for them because a large part of their business comes from the commercial vehicle financing business. They are also into tractor financing. So I would believe that, this stock could definitely turn around and show better numbers. Hopefully, the CV market is doing very well, and that should obviously percolate down to better disbursement numbers for Chola. So Chola is a hold. As far as Zomato is concerned, I think this company is yet to make any operating profits or any operating cash flows, and this continues to be a cash burn business. I would suggest that unless the investor has a 2 to 3 year kind of time frame, only then one should hold on to Zomato, because Zomato, unless and until we don't get any concrete data point numbers, especially on the cash flow, on the operating profit metric, this is a very difficult business to value purely on the EV to sales number. So I think most of these fintech companies have disappointed investors dramatically, and that is why I would believe that if at all if the investor wants a short-term view on this stock, then it's better to exit. Only if you have a 2 to 3 year time frame, then only remain invested in Zomato.
Okay, Kunal, Neha Toteja has query on two stocks that she's holding. Mahindra CIE, which she's purchased at 292 rupees per share. REC, which she's purchased at 95 rupees per share. She wants targets for these counters, and also she wants to know whether she should go ahead and book profits because she's saying that she can hold for the next 1 to 3 months. So what's your advice?
So Mahindra CIE, I think you can continue to hold on for some more time. The stock is still going into a very slow, steady and a gradual uptrend. The volume built up in last 1 month is a bit better and stabler for Mahindra CIE. So that's the stock which I would advise to continue to hold on. You can probably trail your stop loss, looking at the last 7 days or 2 weeks of price support or the low for the stock, keeping that as a trailing stop loss. You can continue to hold on and ride this trend higher for Mahindra CIE. REC Limited, I would be a bit iffy because the stock has this tendency of going into sharp periods of uptrend, and all of a sudden that uptrend reverses and we see the stock going into a sharp phase of correction. Now, since you bought at levels which is 2-digit levels for REC Limited, you're sitting at a 25-30% profit for the stock price. I think it could be a good zone where you may look to book out some profits over here, maybe a partial profit zone or slightly higher than that is what I would recommend for REC.
Okay, Kunal, Shobna wants a view from you. She's holding GIC Housing Finance at a price of 230, currently at a mild loss. What to do in the short-term perspective?
So, again, I think the stock has corrected in the last 3 or 4 days from 240 levels to 218, 219, where the stock is trading right now. The trend still looks quite strong, but then I think buying at 230 was a bit of a far, or a higher end of the price trends for GIC Housing. I think a better level to buy the stock would have been closer to 200, 210 odd range for the stock price. My sense is that the stock may correct towards the 210 mark as well, possibly in the next 1 to 2 weeks. And that's where I believe could be a good opportunity to try and nibble in. So if you're looking to hold on to the stock or average, then I think sub 210 is where you should look to average further.
All right, we spoke about Bajaj Finance in depth. We got both of our experts' view, but this one is on Bajaj Finserv actually, and Deepa Mahati has Bajaj Finserv at the rate of 1,643 rupees per share. She's holding on to this particular counter for the last 7 years. Avinash wants to know what to do with the stock right now. Makes sense to average or book out?
No, I think Bajaj Finserv is the holding company for Bajaj Finance, and they also have interest in the general and life insurance business, Cheryl. I would believe that longer term, the insurance business has yet to play out in a very big way. So my sense is continue to hold on. I think, these are short-term kind of sentimental kind of drawdowns in the market which happen. The company is fundamentally very solid, and I think the insurance business, my sense is over the next, say, 1 or 2 years could see a lot of value unlocking opportunity for the shareholders. So I think Bajaj Finserv, she should hold on. There's nothing to worry, but yes, in the very near term, things could get volatile, and therefore the stock could underperform. But over the medium to long term, I would not be surprised that a lot of wealth creation opportunity could happen from the insurance business.
The next query that we have, Avinash, is from Murari Prasad. He's holding shares of Intellect Design at a price of 854 and currently at a loss of over 50%. What would be your advice in this?
See, Cheryl, I think Intellect, Design is a SaaS company, and there are very few SaaS companies available in the market. Most of them are PE funded, most of them are unlisted, and I would not be surprised that Intellect Design could definitely bounce back sooner than later in the next, say, 12 to 18 months. Their business is also related to IT, but they have a differentiated business model, and I think if you look at the order book position of Intellect, I think they have been very successful in getting a lot of orders, from the insurance, from the wealth management, and from the manufacturing side in markets like US and Europe. So I think currently the headwinds from the US and European markets are definitely challenging. So you could expect some underperformance on the stock for the next, say, 6 to 8 months. But over the longer term, a lot of value could get created. So, if the investor has a 2-year view, I think he could even think of averaging this stock, because definitely once the recession and once the underperformance in the US and European market completely gets over, the bounce back could also be equally faster. So there's no need to panic. Just keep a time frame of at least 18 to 24 months.
All right, Kunal, coming to you. Venkatesan has MTAR Tech. I'm unsure actually he has actually bought this particular counter, but because he just wants a view on the stock. So in case he's already bought into MTAR Tech, how's the future looking like? And if he's not, then do you think it's worth an investment?
I think it's a good stock to buy or look to buy at current levels. Now, in technical sense, the stock is on the verge of a breakout. Now, I was actually looking at the monthly charts, and even though the data is a bit limited for MTAR Tech, but I think this is the 5th or the 6th consecutive month where the stock is trying to break past above a major resistance, which is around the 1700 odd mark for MTAR Tech. So eventually, once that resistance is taken out, you could probably expect a very strong, quick and a swift up move for the stock over the near to medium term. And when that happens, I would expect possibly another 300 to 400 points up move for MTAR Tech. So it's a stock which is on the verge of a breakout, maybe another month or so of consolidation, and then the breakout could happen for the stock. And if you're okay with that kind of a time frame, I think it's a good stock as well as a price to buy.
Okay, moving on, the next question is for you, Kunal. Ilanga wants to know what to do for the purchase in Gland Pharma. He bought these counters, 1,000 shares at a price of 1,957. Instead of Tata Elxsi, he was looking to buy. So what's the advice on Gland Pharma? Sell at current levels or average out will be the advice?
Well, I would not suggest to average out at current levels. This is this is a very sharp selling which has happened for Gland Pharma at current levels. And after such a kind of a very sharp sell-off, there's bound to be a phase where the stock would get into a recovery. So even if there's a mild recovery, say in the next 3 odd months for Gland Pharma, that recovery could probably take the stock back higher to almost 1750, 1800 mark. The only question is that how long will the stock take to recover, whether it's 3 months, whether it's 6 months. But I believe that any kind of a recovery would help you minimize the loss for from your existing purchase. So hold is what I would recommend, and wait out for those phase of recovery or a sharp rally where you can probably look to exit the stock with minimizing the losses.
Okay, next one is from Akash Mathur, and I'll take it to you, Avinash. He's saying he's bought 350 shares of Rama Steel before 4:1 bonus share issue. He wants to know whether he can add some more now that the post-bonus bonus shares stock is down to about 39 rupees per share.
See, I think just buying the stock because the stock has gone ex-bonus is not the right way to look at companies. In fact, Rama Steel Tubes definitely is doing well, but in terms of their their segment which they cater, it's largely the water and the electrical segment. So I think their growth numbers have been pretty decent, but the order book has not increased to the extent what the market has been expecting. So I think continue to hold on to the original shares. There's no need to hurry about to buying this stock just because it's got ex-bonus. My sense is that the oil and gas space where most of the pipe companies cater are better opportunities, and there I think you could look at stocks like Maharashtra Seamless, which is available at a very decent valuation, and where possibly the risk reward as compared to Rama Steel Tubes could be much better. So I would believe that this could be a better choice as compared to Rama Steel Tubes.
In the Bajaj twins, we are getting a lot of queries on that, so let me take the next one on Bajaj Finserv. Kunal Srinivasan has bought 200 shares at a price of 1660. What to do? Can he hold this particular purchase?
So I would recommend an exit into the stock. Maybe if it comes closer to today's opening price, which is around the 1470 odd mark, that would be a point where you may look to exit the stock. And I think use any kind of a mild bounce at play as a good opportunity to try and exit. As I said earlier, that when stocks fall very sharply on the back of news flow and the back of very high volumes, there's bound to be a point where the stocks may sell off further. But that generally happens in a matter of 3 to 4 weeks for the stock price. So a better price to enter the stock would be maybe another 150 odd points lower from current levels, and that could be say closer to 1300 odd mark for Bajaj Finserv.
Right. This was coming from Dasaradi, and he has 500 shares of Equitas Small Finance Bank at 33 rupees per share. Kunal, IRFC 300 shares at 26 rupees per share. He got this both allotted during the IPO. So now he wants to know, should he continue to hold on to them, or what sort of a target should he look at for this one?
So both the charts have started to recover. In fact, in the last 3-4 months, Equitas Small Finance Bank, IRFC, as well as most of the other railway stocks like IRCON, RVNL, etc., these stocks have started to do pretty well for themselves. So I think the trend seems to be now getting in shape for these stocks. So I think it's a good time where you can look to hold.
Okay, the next question of Avinash is from D'Souza, and he's holding 200 shares of IRP Infra bought at a price of 250. Currently at a profit in this particular counter, but can hold for the next 2 years. What will be your advice?
No, I think he should hold on safely because IRB has recently decided to go in for a stock split, and looking at the kind of business positioning IRB, infra has in the toll kind of business, currently, I would not be surprised that this is an area where there's a tremendous growth opportunity. So I think if he can hold on for the next, say, 12 to 18 months, he could expect a decent risk reward here. So I think it's better to hold on, and probably he could expect another 15-20% upside, in this time frame.
Right. The next one that I have is coming in from Nikhil, and Nikhil wants a technical view on Nalco. Kunal, should he look to buy at current levels or should he wait?
I think you can look to buy at current levels. Nalco, I think, and most of the other metal stocks, they've started to get into a decent recovery phase. Nalco, I think, if I'm not wrong, is also closer to its 200 moving average breakout, and this could be a breakout which can happen possibly after almost a gap of 8 or 9 months. The last, I think, the stock had been trading above the 200 moving average was somewhere in the month of May, June 2022. So this could be a very strong and a formidable comeback for Nalco. I would suggest a hold.
Okay, Kunal, the next question is from Palakuru. He is holding shares of CDSL at a price of 1300. What to do in this one, hold or sell?
See, I would suggest a hold on CDSL. The stock has been very low beta as such over the last 1.5 odd year. From I think last year low, the stock, which was around 1080-82, managed to rally to almost 1400 levels. But then the stock has also come back, back around that 1080-1100 mark for itself. So which means that it's trying to, grind into a trading range for a medium to longer term. So I would sense that you can look to hold on to the stock rather than adding on to any fresh quantity at current levels because of the very slow, sluggish, and the low to moderate beta nature of the stock.
Right. This one is coming from Vimla George, who wants to know good levels to enter Nesco or Fact. Which one is a better buy at current levels, Kunal, according to you?
Well, I would go for Nesco. Now, the only reason for that is because Nesco has been one of the stock which has been more sideways. Fact, on the other hand, has run up exceedingly high. The indicators are very highly overbought for Fact. I think that's one of the reasons why I would not recommend a buy, even though the stock has done exceptionally well in the last 2 to 3 weeks. So you have to wait out for a phase where the stock corrects by at least 10 to 15% and then look to enter into Fact. But then at current levels, Nesco could be a better buy.
Okay, Avinash, Anu is holding 25,000 shares of IDBI Bank at a price of 59 rupees 40 paisa. She is looking for a short-term view on this one. What will be your advice?
I think IDBI Bank is definitely, all ready to be sold to some private sector buyer. In fact, most of the roadshows have got completed and the due diligence is also got completed. So very soon, in the next, say, 1 or 2 months, we could see some, corporate announcement here. So I would believe that, if the investor can hold on for the next, say, 2 to 3 months, probably some announcement could come in, just after the budget. And that definitely could re-rate the stock significantly because clearly IDBI Bank is now looking at some sort of a divestment, and that if it happens, obviously that could lead to a significant re-rating. So I would say that keep a couple of months in time frame in mind, and obviously the investor has a short-term view. So probably in the next 2 to 3 months, this news flow, if it does come in, that could lead to a significant re-rating in the counter.
All right, on that note, let's slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your stock-related queries. So experts hang in there, and viewers, don't go anywhere.
दिमाग को फैल
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites.
Welcome back to Buy Now Sell Now. A quick look onto the markets. Nifty Bank trading with a cuts of around 320 points, and Bank Nifty breaking below that 18,000 mark and down about 60 odd points right now. But coming back to taking your stock related queries, the next question is from Chalakundi from Kerala, and Avinash is holding shares of Kalyan Jewellers at a price of 121. What are the future perspective for this company? Is that a hold or sell at these levels?
I think Shristi can continue to hold on to Kalyan Jewellers. I think the stock has done quite well, from levels of around 60, 65, the stock is almost doubled. And I think the jewelry market in India is a large unexplored opportunity. The market has been growing by almost 25, 30% every year. And I think the shift of GST has actually made it possible that the organized sector is growing quite rapidly, eating into the share of unorganized player. And Kalyan Jewellers has got a large retail network, which I think it is expanding quite aggressively. So I think, keeping a long-term view, I think he can definitely continue to hold on. My sense is that over the next, say, 12 to 18 months, hopefully now post-COVID, discretionary buying has come up in a very big way. And that should help the overall jewelry market to grow. And obviously, Kalyan Jewellers should also benefit. So continue to hold on, but keep a time frame of at least 12 to 18 months.
All right, with that, let's actually kickstart with the rapid fire then. The first one that I've got is coming in from... Actually, I've lost the count of the queries. Shristi, you can take over.
Okay, so let's kickstart the first one from Hema. And Kunal, she's holding Vedanta at 9.5% profit now. Book profits or wait for some correction to come back again?
Book profits and look to buy back again if the stock drops to 285 levels.
Okay, this one is from Indu Sharma, wants to know about Laurus Labs, has about 300 shares at 395 rupees per share. Would like to add some more. Does it make sense right now, Avinash, or should wait for a dip?
No, I think once you get a dip, there's no need to buy the stock immediately. I think wait for the correction to happen, then one can acquire some more stock.
Kunal, another metal counter, Anand N, is at a profit of 6% in sale. What to do for this month, 3 to 6 month perspective?
Yeah, you can continue to hold on. If the stock breaks at 90 plus mark, we can expect 96, 98 to be an immediate target for sale.
Okay, Raghupati Gopal has Sun Pharma 100 shares at around 830 rupees per share. Is it worth holding or should shift to another pharma stock? This is the only pharma stock in his portfolio, Avinash.
Yeah, I think he should continue to hold on. Prospects seem quite good, and the stock will definitely give him a further decent risk reward going forward.
Okay, the next one is from Victor. Avinash, which one to choose for a long-term perspective? Sri Digvijay Cement or Samvardhana Motherson?
I think Samvardhana Motherson could be a better bet. I think in the medium to longer term, the value I think which could come in over the longer term is definitely better.
Kunal, Ramesh wants to know, good time to enter SBI card?
Well, I would suggest an avoid on SBI cards at current levels.
Okay, Avinash, Mahalakshmi is holding Ease My Trip, currently at a mild profit now. Book profits or stay put for long term?
I think one could book partial profits considering the fact that the company has announced 3:1 bonus and a split. So book some partial profit and continue to hold on the rest of the company.
All right, and with that, we come to the end of the rapid fire as well as we come to the end of the query segment. Thank you so much, Kunal, as well as Avinash, for joining us on the show, taking our queries of the viewers. And also, Kunal, a big thank you for today's Pathshala, a lot to learn from that. But with that, we are totally out of time on this edition of Buy Now, Sell Now. But remember, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. And keeping up with our values, we present the second season of Nivesh Ke Fande. And on this edition, we actually focus on the difference between direct equity investment and investing in mutual funds. So take a look at that as a wrap from Shristi, myself, and the team that put the show together.
Hello and welcome to another edition of Nivesh Ke Fande. Avan, at times, investors cannot decide whether they should invest directly in equities or invest via mutual funds.
Yes, Nikunj, that can happen. So today, let's talk about how they're different and, more importantly, which kind of investors they're suited for.
Let's start with direct equity. These are what we usually call shares. They allow an investor to own portion of the company, or they can be a part owner of a business.
Right. And mutual funds are vehicles to invest in different asset classes. Mutual funds invest in equities, bonds, government securities, or other fixed income assets based on what kind of a mutual fund it is.
So importantly, the difference is that in equities, the investor is deciding which shares to invest in, while in mutual funds, there is a fund manager, an expert who will take those decisions.
Right, and the manager, along with the research team of the mutual fund company, take informed decisions on where to invest the investor's money.
Before investing in mutual funds, an investor can decide the category of the mutual fund that they can also choose and that they are comfortable with, and the asset, the companies that the mutual fund is investing in.
For investors that are new to investing, mutual funds are an ideal way to start their investing journey, since the fund manager is constantly tracking their investments to help them get optimum returns.
Another benefit of investing in mutual fund is that an investor's money get invested across large number of securities, even when investing in a single mutual fund.
Yes, and that way the risk undertaken is relatively minimized as opposed to when you invest in the shares of a particular company or companies.
So I want to take this point a little further, Avan. So by investing in mutual funds, investor will get exposure to large number of securities, and the best part is that that can be done at a very low investment amount.
Exactly, Nikunj. With as low as just 100 rupees, which is actually difficult to achieve when you're investing directly in equities.
Yes, another point of difference is to invest in equities, an investor needs to have a demat account.
True. And for mutual funds, the investor does not even need to open a demat account.
And so now you know the difference between investing directly in equities and investing via mutual fund. That is all in this edition of Nivesh Ke Funde. Thank you for watching.
In the world, I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very
Nifty as of now struggling around the 18,000, remains subdued. Broader markets remain under pressure. IT financials among the key drag. FMCG continues to gain. Crucial data of US jobs will be coming in today post-market hours.
Indian valuations remain challenging, but the country boasts on the best domestic demand. That's the word coming in from Chris Wood, agreed on for your latest note. He expects bond markets to continue to rally as long as Fed keeps tightening.
Decks get cleared for IDBI Bank divestment. Market regulator SEBI allows Center to classify the stake into bank as public after stake sale is complete. SEBI has mandated that the government voting rights should not exceed 15% of the total once the divestment is done.
Vodafone Idea is once again dialing banks for survival. The debt-laden telecom giant is seeking emergency loans of up to 7,000 crores from banks like SBI, PNB, HDFC Bank to clear dues owed to Indus Towers.
Upbeat operational performance continues, this time from the likes of Shobha Developers, Force Motors, which is in fast lane, as well as Lodha Developers. They have declared their numbers. Numbers are one of the highest ever across real estate companies.
And cross-currency headwinds could keep the fourth quarter for the tech sector subdued. The street expects muted revenue growth for large caps, but the good news in the margins may have bottomed out. Analysts don't expect major changes to FY23 guidance. TCS will kick off the earnings season on January 9th.
Hello and welcome to Markets at Noon. With me is Vinny Motiwala. I'm Pankaj Podar. We'll be taking you through the next 1 hour. We'll talk about what's happening. Importantly, TCS preview, as Vinny just mentioned. Various other Q3 updates have come in from real estate companies. All of that will be in focus. As we talk about the markets, 52 points lower for the Nifty. The broader markets, that's the mid-cap index, is down 0.3. Small cap is down 0.33%. So that's what you can see. Slightly subdued in terms of trading session, but one can say that, how the markets have reacted to Fed, what's happening globally, one would given that, a little bit of subduedness was needed. Yes, there is a trigger coming in of result season budget in the next few weeks, and I think that is something which definitely markets would take a lot of cues from. Emin Kapadia, Senior VP Institutional Equity, KR Choksi, is with us. Emin, good afternoon. Thanks for taking out time for us. What do you make of this performance? Yesterday we recovered in second half. Today we are giving up some gains, but then, S&P, which is a 4,000 index, was down 44 points, and Nifty is down 52 points, which is a 18,000 index.
A very good afternoon to you, Pankaj. Thank you for having me. It's always a pleasure. Frankly speaking, we walked into a corrective phase, which is not yet over. Surprisingly enough, the VIX hasn't gone up significantly, which would have been a cause for concern. The Bank Nifty, which was propping up this whole move, has walked into a corrective phase. And the dollar index has corrected by more than 10%, and our rupee is not even appreciated by 5%. Okay, we are not part of the dollar index per se, but such a big depreciation of dollar index is not reflected anywhere. Okay, the rupee is strengthening just a bit in the last 2 trading sessions. I think that is also taking its toll. In terms of levels, support at 17.9 and 17.792. So I believe the downside could get a bit limited. But yes, there are no signs of a clear reversal yet. 18,250 is a level over which the market should improve a bit, and the corresponding levels for the Bank Nifty are 43,600. So stock specific, you have pharma looking good, pockets of FMCG. IT remains under pressure. Hopefully the results, TCS results on Monday should point towards a clear path, but it's mixed all over the place, and Bajaj Twins have got hammered. Reliance is sort of being the saving grace along with some of these FMCG stocks. Pankaj.
Right, Emin. Good afternoon. And this is Vinny joining in as well. In this market, then, all that you explained right now, what are your top picks and what sectors are you actually looking out for then?
A very good afternoon, Vinny. I think, I don't have a pick on insurance, but that is also one sector. HDFC, you have ICICI Lombard giving a breakout, but yeah, that's looking promising. But firstly, I have a buy call on Voltas, Vinny. Deeply oversold, positive divergence, high tops, high bottoms. We set for a recovery, which is already underway. I believe we could gain more from here. It's a contra buy call. Buy call on Voltas at 822, stop loss 810, target 846. Secondly, a buy call on BPCL. We have taken support on the 55-day exponential moving average. We remain safely ensconced in a intermediate uptrend. About 350, the stock looks like going to 370. Setup seems positive in a wobbly market. So buy BPCL at 344, stop loss 332, target 368. I think it's a modest target over the next few weeks. This could overshoot the target. Vinny.
All right, Emin, thanks so much for taking out time for us. Good to get perspective from you. Earlier in the day, we did speak to Vikas Khemani on top picks that he has within various sectors. He believes that manufacturing will remain one of the big themes and also good business model. Particularly spoke about AB Capital and the changes of the new management over there. Let's hear him out.
Manufacturing continues to remain a very big theme. I think it is, I mean, nothing changes from a 5-10 year perspective. And we have seen whenever any big trend plays out over a long period of time, there will be intermittent volatility, there will be intermittent downturns, which will come and be part of it. We see that as a big opportunity. You see, Syngene is not a pharma company, it's a CDMO, CRO and CDMO company. It's a very solid company. An environment like this, their business model is good. They have done a lot of sort of capex in the last 2-3 years, and we think the delta of that is going to come in this year or next 1.5 years, and which is not at all dependent on anything what happens in the environment. Now, according to me, investing in a place like this at this point in time, provides a lot of risk, reward, comfort, downside protection, right? Similar is the case for Laurus. It has corrected 50-60% from the top. Business model is good, opportunity is good. So we, in fact, just increased our stake in that. We had earlier position, but we increased our stake in that. So we feel that we have kind of done some sort of portfolio alignment. It's a good NBFC. There are no major problems. One of the biggest thing in NBFC is the liability side franchise, and they borrow capital at a similar cost to as Bajaj Finance, right? I think Vishaka coming in, according to me, adds lot more energy or drive to the whole platform. And we think that this is completely ignored stock by the market. The institutional holding is almost close to zero right now, if you take out the 2 private equity which owns. So it's under-owned. Big change is happening in that. Similar to, in that sense, setup what ICICI Bank was there, where it was under-owned, change happening. And over the next 2-3 years, I think it can deliver 20-25% kind of growth. So we can be patiently, and valuations are clearly in your favor. So I mean, this is the kind of setup we call in our Carnelian language magic basket stocks.
And moving on, the market regulator SEBI has actually allowed the central government to classify its stake in IDBI Bank as public, and this is after it undertakes the stake sale exercise. SEBI has also mandated that the government's voting right should not exceed 15% of the total voting rights of the bank. Let's go across to my colleague Ankur Mishra, who's standing by to give us more details on this. Ankur?
Yes, Securities and Exchange Board of India has allowed IDBI Bank and given permission for classifying government as public after the stake sale is done. Remember, there was an application which was made by the bank on behalf of government, and this was done to give the relaxation to the acquirer as well to meet the minimum public shareholding norms. Now, as per the permission granted, the new acquirer will have to meet the public shareholding norms, meaning to dilute the stake to 25% within the 1 year. And currently, the plan is to sell more than 30% of the stake by the government, and with the cap which it has obtained from SEBI, the public shareholding will come down to 20%, and currently the retail shareholding is around 5%. So overall, it seems that the relaxation has come from Securities and Exchange Board of India well before the deadline for expression of interest, which is there on 7th of January.
That was an exclusive with Ankur about IDBI Bank. In fact, earlier towards the year end, we also got a chance to speak to DIPAM's secretary about IDBI's stake sale. What's the way ahead? Let's hear out what he had told us then.
Where is IDBI Bank stuck? And are you confident that FY24 the stake sale will go through?
Yes, it will. I think structurally we have worked well with the Reserve Bank of India on that. We had lots of queries around, who can participate, who cannot, what will happen, what kind of difference. So we have kept it well open. It's a structure which is open, except for, of course, not available for corporates or corporate NBFCs. Rest of the people, it's an assuring kind of a thing. You have upfront, we have told that you are in, you can be in. Upfront, we have told that this is the way the structure will happen. We got more than 600 queries to our EOIs, and they have been well answered. That now we are just waiting post New Year, just in the 7th of January is the last date for receiving EOIs, and we hope to receive good number of EOIs.
So somewhere in FY24 first half, can I say that IDBI divestment will see light of the day?
Yes, I think Given our process, I think it takes about 9 months if you really look at it from the point of view of release of EOI to closing. 9 to 12 months is the time. I think there isn't very difficult because the banks, listed banks, they've got lots of information available, so due diligence process is easier. There could be a vendor due diligence, so therefore there would be a better information available in the data room. I believe that, and Reserve Bank of India is with us in terms of, doing a proper fit and proper right in the beginning so that we don't face uncertainties while at the time of financial bids. So structurally, although it's the first time that we have such a deal happening, but we have worked hard on it and we'll continue to see that it goes.
How will the process work? Because normally there is a reserve price. Now in case of a financial institution, there may not be a reserve price. How will the bidding process work?
No, they would. The reserve price is actually as an internal assuring price for us. It's not revealed to them. It's also set post receipt of financial bids. We don't know about what the financial bids have been unlocked. It's a way of, telling the bidders that they have to give the best price for the shares, because these are public shares that we are dealing with. So it's not my private property. It's the property of the people of India. So therefore we get the best price, and we make our process ensures that, they would be really doing it that.
Insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we